Guess who wanted to come say hello? Hello! What's up, everybody? Michael and Coco here. You're watching the Daily Stock Market Brief. Beef. You're watching the Daily Stock Market Beef. The show that we do Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Today's episode, we got a lot to talk about because we're seeing some cool things take place. So let's just go ahead and get right into today's show. All right, everybody, welcome back. Before I start talking about everything, we're looking at the market dashboard here, but I see these spam comments coming back. They look like me. It's not me. So please just ignore those. Do not fall for them. I won't ever ask for a WhatsApp. There's timestamps in the description below. We're looking here at the technology sector. These are 11 sectors of the S&P 500. You have technology and communication services leading the way. Hey, possibly because of the 1% up day, we saw some big gap ups, and then we saw the ramp up higher. I think having that technology and communication services make up such a big portion of the SPY that really helped fuel the S&P 500. Now, energy was one of the laggers of the day, but something interesting here is taking place behind the scenes. We've been calling this, and I want to call it out once again. So first off, I want you to take a look at XLE. Now, we're looking at a relative rotation graph. So we're looking at strength. Okay, these little worms on here are the sectors. Then you have these four categories: improving, leading, lagging, and weakening. Okay, and we're looking at a tail length of 4 weeks. Now, something that I don't bring up often, I maybe said it a few times, but you can see how some are very long and some are short, but it's all the same 4 weeks. Well, this says it just adds to the power of that move, which is very interesting. Okay, so what do you see? You see the biggest worm here on the screen is XLE. So energy is really weakening here from a relative performance. Okay, so that is something to take note of. And now we're starting to see oil, which once we get into the commodity section, we'll talk about that. But another thing that I want to point out is XLU. That is a defensive name. We've been talking about XLU and XLP, how it's coming through this area and it's improving. And look at the tail length on that one as well. Some of the biggest leaders, as far as the largest tail goes on this 4 week time frame is XLE and XLU. So a very interesting rotation that's kind of taking place here. Now, what I want to pull up now is the chart of XLU, and this looks like the bull flag of destruction right here. So, I don't know necessarily if it's gonna. I'd say if we start breaking above that 66.50, that could be the start of a full breakout here to around 68, and then might have some hesitation up there, and then we might follow through. But that's a big flag right there. So, if we do start seeing this whole rotation continue into more defensive names, and we're seeing a lot of chop in the markets, perhaps we do get this breakout here on this bull flag. We've seen it actually down here slightly, a very sharp flag, and then that broke out. Now this one would take us up, it would take us up significantly further. Another one that was performing well from this standpoint was the XLV. You can see it's creeping into improving, heading towards leading. It's going from bottom left to top right. When I look at the XLV, first off, it's creating somewhat of an ascending triangle. We've seen the last couple of 2 days of strength, but it wasn't on the greatest of volume. You see the price percent oscillator looks like it's about to cross up. The black line through the blue line would be bullish. Slight negative divergence there on the RSI as well. So nothing set in stone for this, but you can see from a relative performance, it's picking up pace, it's improving. And from an absolute perspective on price action, it's in bullish context overall and somewhat of a bullish pattern here. Now, when I take a look at these industries within the sector, you can see healthcare providers, pharmaceuticals, medical supplies, medical equipment, and biotech. I'm looking at 3 months' time. The laggard was biotech, and I was just interested in pulling up biotech, and I pulled up biotech, and you can see why it's been a laggard. It's been getting hit pretty hard. This is the Nasdaq biotech ETF, IBB. It's an iShares ETF. You can see that this might just be a massive falling wedge forming right here. Still has a lot of work to go as it's been doodling around for quite some time. Significant chop. However, we start getting back above that 100-day moving average and even potentially take out this previous area, this could be a moment of accumulation where we potentially might break out of that and scream to try to reach that previous all-time high. So, well, I don't know if it's actually the all-time high, but this previous swing high right over here, you see the price percent oscillator, it's going up and it just did a bullish crossover. It's still below zero though. You see the RSI getting back above 50. So it's something to maybe keep an eye on. And on that note, if you are a patron, thank you so much for supporting my channel. I have 2 separate tiers. A $9 it will be the one that you can see my daily trade ideas. If I see them, I'm posting that shortly after this video goes live. And then I have a $4 tier, which I really appreciate the people joining that as well. You know, it's $4 a month just to support my daily show. It means the world to me. So thank you so much. I think we're at around 450 almost patrons. Let's hop into the indices now. Starting with the S&P 500 on the daily time frame. Everything here is in bullish context. We saw a big day today, right? Up 1%, pretty good. However, we're still below the 20 period moving average. Nothing, you know, there's no clear direction as of right now, but if you had to pick a side, it'd be more on the bullish side given the current context. We're back above the 5 EMA, and we are, you know, obviously bouncing from the 50, but we still have work to do here. So it's a very difficult time, as you already have well witnessed, these kind of just, you know, large distribution type moves going back and forth and back and forth. So keep in mind, tomorrow's Friday. We got that VIX Crush Friday, right? So we will see what takes place with that. Sorry, I got distracted there for a second. SPY on the 30-minute time frame. This is just, you know, the same old script. Look at how, I mean, this is completely normal market behavior, right? It just drops right back up, drops right back up. So a very obnoxious environment as it stands right now. Very hard to find direction in trades. So if you're feeling impatient, trust me, everyone's feeling impatient in these areas. So it's best to just stand on the sidelines. I mean, cash is a position. I have not been trading actively all too much, to be quite honest, just because I don't have any clear direction. It's just blah. Right? We have resistance right here at around 418. We got to see what takes place in the aftermarket hours. This bear flag, clearly, we just gapped right through it, left that gap, and then we ramped up higher, and we just camped right there for the day. You can see the last 30 minutes, we did take somewhat of a nosedive, but you know, I don't know what's going to come from that. I want to look at the 15-minute time frame. Zooms in a little bit. You can see those 30-minute candles right here on the Zoom thumbnail. As we were running into this previous area of resistance right here, right around 416, and then we have more at right around 418. So if we start getting back, if we close that gap and start getting above it, there's no reason why we can't start, you know, heading higher to right at around 421, 422. Just be mindful that, you know, this market is just bonkers right now. When I look at the BP SPX chart, not giving us much. It's not oversold. It's not overbought. I'll be keeping an eye on it. It had a little bit of an uptick today, which means, hey, we can head up higher, but it's still below 50, so it is what it is. As far as the percent of stocks above the 50-day, right here in the S&P 500, and then the percent of stocks above the 200. What does that mean, Michael? It means on the 50-day moving average, 70% of the stocks that make up the S&P 500 are above the 50-day moving average. Did I say that right? Yeah. 70% of the stocks are above 70% of the stocks in the S&P 500 are above their 50-day moving average, and right here, 92% of the stocks in the S&P 500 are above the 200-day moving average, and these are high numbers. They really are. We had a little bit of an update here. You can see a little spike up on the S&P 5, the 50. This indicator, but you can note that as the market's been climbing higher, I mean, we saw this negative divergence, and it still hasn't broken out of that somewhat negative divergence. So if the market continues to move higher and this is dragging lower, that means there's a lot of internal things taking place that are weakening. So we'd have only a few big players. So for example, like tech makes up a big portion of the SPY. And if tech continues to be this big player in communication industries, but yet we have a lot of other sectors that are weakening and falling below their 50-day moving average, this might continue to drag lower. And these are still, like when you get up to this 90 range, those are really high levels. So typically when you get spikes up there, you get somewhat of a pullback. Same thing goes with the 200-day moving average. Let's look at the Dow Jones. All right, so Dow Jones. Couple things I want to call out. Overall context, bullish. We had some follow through on that hammer candle. Not fully out of the woods yet. I think we landed right below or on the 5-day EMA. So 34,086, and then the close was at 34,084. So just below. We're still below the 5 EMA, and to note, it is down sloping. It's hard to see. It's purple. It's cutting through all the candles, but it's you don't really want to go long on a down sloping 5 EMA. It's not, if you're a trend trader at least. But overall, it did find support at the 50-day moving average, and we're still stuck right there at the 20-day moving average, which is at 34,147, and where the close was at 34,084. So we are still below the 20-day moving average too as well. Has work to do. Price percent oscillator still heading south. A little bit of an uptick there in the RSI. Overall context though is still bullish. Just be careful, right? We've just been chopping back and forth. A lot of crazy things go on. We've been seeing these vertical movements to the upside, and we see some big downside movements too. In the conclusion section, I'll try to kind of wrap my thoughts together a little bit. We'll look at the 30-minute time frame here. You can see very similar to the SPY, that 30-minute drop. Nothing too crazy overall. I mean, we had just a gap up, came back to back test the gap, and then we ramped up higher throughout the day. Nothing really to report here. I'm going to be looking at this time frame and also a 15-minute time frame for more overextended levels. We got very overextended on the 30-minute because of that big gap down, and what do you know? It was bought right away. So, hey, if we get this huge gap up and we get very overextended like we did over here, that would be more of a selling event. And then you keep in mind, we have resistance at 345. And this gap is also, if you close the gap, it's also going to act as resistance too as well. This right here could have been the start of something big. This little island reversal type pattern up here. We rammed up, gapped up, and then we had that gap down, and we still haven't recovered quite from that yet. Now, on the 15-minute time frame, I wanted to just call out, I've been getting so many weird phone numbers calling me. Maybe I should pick them up. I literally, the weirdest numbers, sorry, I'm getting distracted. This little ascending triangle broke down, bear pennant, whatever you want to call it, broke down, we came up. Now I'm starting to notice there's just a slight, this is the DIA by the way, slight trend line that we haven't broken out of yet. But if we do break out, I would say, yeah, I would imagine that we can easily go 345 would be the first kind of target there, and then we could go close that gap. I would think that maybe if we broke out, it might, doodle up, come back to back test. If it finds strength, then head higher. We'll see. We had that little negative divergence right here on the 15-minute time frame. We're starting to see it sink a little bit lower too as well. The BPINDU, this was oversold. Overbought the other day, and now it downticked. So now it's coming back out of that area. But yet the Dow Jones Industrial Average did see an update today. So it was up slightly, 188 points. So just kind of interesting there. But as this got overextended, perhaps maybe that is telling us something that this is turning down. We will see. I don't see the necessary a trade at this particular point in time. But one other thing that I want to call out is the transportation average. I'm looking at the IYT. Now, if you know doubt theory, you look at industrials and you look at transports. It's important to look at. And this has just been, very similar to DIA. It had this island reversal pattern. We broke down and we came back, closed that gap, and then we fell off a cliff. This potentially could be a falling wedge. I might be reaching here just a little bit. Maybe not. I don't know. But it's something to keep an eye on. This trend line right here is very algorithmic right here. You can see it's just been resistance, grinding down through that trend line, came back, back tested it again. So if we break out of that, hey, that could result in a pretty strong move to the upside. It did get very overextended here to the downside, and now we're just kind of seeing it move up, and now we're getting rejected right around that 50 level on the RSI. So perhaps we come back down for another point of interaction right down around 265, maybe lower, who knows? Maybe that creates a positive divergence. Okay, so first off, we're overextended here, right here. If we create a new low and the RSI is on a positive divergence, that actually might set itself up for a very good bounce opportunity, because the transports, although they're very, very overextended, any way you look at it, really, a quarterly, monthly, weekly, it's been insane. And I pointed this out many times. It doesn't mean that it can't see some significant rallies, as we've seen this bounce, boom, this move, boom. So perhaps if we see that, it could be a good risk versus reward opportunity to keep an eye on. Let's go into the Nasdaq. Nasdaq tech saw the biggest move. Price percent oscillator looks like it wants to start crossing over to bullish. Still below zero though at this point. It's very hard to determine. You got to be careful here, right? I don't see a great trade setup. We're moving forward north into a declining intermediate average, the 20-day moving average. We are back above the 5, okay? So that's good, and it's starting to upslope. However, we have to, there's a lot of work to do here. And you can see that it's just been booms, very, very, feels like a lot of distribution taking place to potentially lead into a decline. However, overall, the big, Godfather moving averages are still bullish. The 100-day moving average was saved. We're back above that. The 200 is sloping up too as well. So everything here looks good so far. Just be very cautious in this environment. I mean, a lot of people are talking about the melt up. Very possible. What's one other possibility too? I didn't draw this, but if you connect this high to this high and draw a line out, and then you connect this high to this high and draw it out, it's starting to look like a rising wedge. And you'll probably start seeing people talk about that. Maybe you've already seen people talk about that. I'm not that smart, but that means that if we do break out, we would create another high, potentially on a negative divergence. That would be nice. And that would be a third point of contact, which would be important. And if we reject back down, then we'd go from there. So it's a possibility. We'll just continue to monitor it. 30-minute time frame. This was that bear flag we were kind of tracking. It was kind of a bear flag. It was reaching a little bit. We gapped above that. We got above the 326, and we said if we cleared that area, it could make for a good trade to potentially get up to 334. We ramped up and we camped up right around 330. We'll see what tomorrow brings. We are getting a little bit overextended, slightly, not quite. We'll see. If we get a gap up tomorrow, I would be very cautious to buy on a gap up. I'd let the market settle, or you'd sell into that strength, because if you gap up right at around this level on the RSI and you have a gap above us and then you're overextended and we're on a vertical movement already, it does seem like there'd be people coming in to take profits. So just bear that in mind. 15-minute time frame, a little bit of a rising wedge here on a negative divergence. Obviously, the market's closed right now. We might gap through this, or we might gap down and break down through it to fill this gap. And this is the cues. 323 would be a pretty strong level of support. You might even find some support right around 326 too. As it stands right now, no crazy trade idea for the Nasdaq. Now, what is interesting is the BP chart we had that positive divergence. Look how fast that move up was. It's a pretty aggressive move to the upside. We still have room to go to be overextended or overbought, but just take note that this thing could get overbought very quickly, which goes to the narrative. We're moving very quickly on a downsloping, intermediate term average, and we have resistance right above us. So it's nothing to chase. You don't want to chase. You want to be prepared for if we. It'd be nice to see something like go up and then we consolidate sideways and we find a little bit more strength. You have this one start turning up. That would be a little bit better in my opinion to see. Here's the semiconductors on the 30-minute time frame. Semiconductors played out very well. It just completely gapped up and went completely vertical. Once again, we've been seeing this crazy market movement, right? We gapped down here, went vertical. We gapped up here, went vertical. I don't know. Semiconductors are looking very strong above 235 there. That's that gap, and there's previous resistance there, so that looks good so far. But it's not, it's not out of the woods. We have a gap right above us. We have a gap right above that, and those areas can act as areas of resistance. So nothing clear so far. And the reason why I'm showing you semiconductors is because it makes up a big portion of the Nasdaq Composite. Let's go into Russell. Slightly up on the day, same story goes. We have still this neckline, still an advanced head and shoulder pattern. We have a flattening 50-day moving average and a flattening to almost declining 20-day moving average. I would put that more in the category of flat. And we just recovered the 100-day moving average on the price action. So no quality setups right here, to be honest. You'd be risking a lot, just to potentially maybe go up higher. Or you'd be shorting into a potential area where we could definitely squeeze higher. I just don't see anything very positive at this particular point in time until we straighten this out. This is just a lot of noise. It's been crazy. Now, what is interesting though is the 30-minute time frame. We talked about this bear flag, and that still holds perfectly in this pattern. And in the last few minutes of trading, we jammed up and closed that gap. It just works like that, right? And that's an area of resistance potentially. Now, I might have drawn a line like that. That can act as an area of resistance. So perhaps we actually go up a little bit higher. We'll see. But just take note that the bear flag is still there, and the bear flag in financials are still there too as well. We still have that gap above us though. All right. So just some interesting things to take note at. Indicators. The Cohan high-low, this is good for finding bottoms. And typically, like the blue lines right here are pretty significant bottoms. So that's what I really like to use it for when it comes down to this 0.05 and then it starts to turn up. You can see, boom, it found that bottom, boom, it found that bottom. However, the last time we called this right here out, we said it's pulling into this, it bounced a couple of times there, right? Red line bounce, red line bounce. Here, bounced perfectly, right? And now we're kind of pulling right back into this. This is a day late, by the way. This is May 19th. It hasn't updated. So I don't know where it's at exactly at this particular point in time, but it might be turning up. And that could be a bounce. You can see right here on the weekly candles, those are hammer candles as of right now. The week's not over. We have one more day. And, those are bouncing type candles. So, like I said, it could be just forming, another rising wedge right here potentially. We'll watch it. That was, sorry, the Nasdaq, what I was talking about. The high-low, the high-low index, we've been talking about that negative divergence. We crossed through the 20-day moving average. It actually went lower today, continued to head lower, as while the NYSE went up. So we had an up day in the NYSE. We did have an up day in the NYSE. It was not too much movement, but we were up. Now, the last time the price action came down here, I mean, it's up, it's at 70, so it's still technically bullish, right? And it can doodle around like that for a while. Last time it was around this range, it was right around this dip, and then it started to upturn, and then it crossed through the green line, which is the 20-period moving average, and that right there really sent us up higher. So if we start turning up here, I would say, would give me more confidence is if we turn up through the 20-period moving average. So we'll monitor that. NYMO, the breadth of the market, what's going on there? Absolutely nothing at all. So yeah, I mean, strong day overall in the markets. Breadth is kind of whack. Asset managers, what are they doing? And what's RightX doing? What's real money doing here? Got a little bit more bearish so far. I don't know if this is fully updated. This is on the weekly time frame, but I didn't pull it in I don't think I showed it in my last week. I can't remember now. But we did see a little bit of a downtick here, 44.21. Obviously, when it's above 100, that means they're, levered up, full bulls going that way. But now we can see slightly bearish. That can change quickly. As, we had put a hanging man candle in last week. We don't know where we're going to finish this week, but hanging man candles could be a topping candle. So we'll see. Commodities. Copper. Okay, this is important stuff. So hopefully you're listening to the commodities section. And chances are, if you just heard me say that, you are watching the commodities section. Okay. We got overbought. We're taking a breather. Overall context, bullish. Price percent oscillator crossed over. That is bearish. Overall context, moving averages floating up. That's perfectly fine. What would be awesome here? Because I do think that we'll continue to see inflation, and Dr. Copper over here is a great tool to watch. I think copper mining stocks will be something that you really want to pay attention to if we start pulling back into this 50-day moving average. That'd be probably pretty awesome. I feel like it's been holding a support. Boom, boom, boom. And if we get one more pullback into that, right around where, it increases every day, but right around 440, let's say, could be sooner, could be right around 440, 450, where this previous resistance was actually, because that can act as support now. So if we pull back a little bit further into that, that could create a very good opportunity with copper miners and or if you trade copper. Lumber is starting to see some strength again. What do you know? We saw this big down move. Maybe it's a dead cat bounce. Maybe it's not. We will see. Jeez, it almost feels like nothing could go down. I do know that was it Peter Schiff or something like that. He believes that lumber is going to even go break through this 1750 level and continue to move higher. The chart suggests that it definitely will do that just because it's been flying up. It's pulling back into that 50-day, and now it's starting to head higher again. However, these are just such aggressive moves. So, I can see why it'd go up and break through that, but I can also see why we can correct all the way down to 850 without hesitation. So, we'll watch that. Oil. This is the important one that we're supposed to watch, right? We didn't get back above that 67.50, 68 level. It acted as resistance, and I just drew out this trend line here. It's technically like in a channel, but we did crack through the 20-day moving average. We closed below the 50-day moving average, which says in this little trend line here. So, and the price percent oscillator on top of all of that, we're starting to see volume pick up here. And the RSI crossed below 50. That looked to me, it looks bearish. So I'm saying a price target in this kind of 54 to 60 range. It's a big range, right? But the reason why I did it is because there's previous resistance here, which can be support, and then we have previous support here along with the confluence of the 100-day moving average. So we'll see. I believe oil prices will continue to rise. I don't think that they're just going to completely collapse here, but you know, who knows? It's very hard to determine. But noticing when we talked about relative rotations and the strength, the weakening in XLE, you're starting to see that weakening a lot, significantly with that long tail. Oil is starting to head a little bit lower. It got very overextended, so it's taking a breather here. Overall, still, it's in bullish context. So these type of things are healthy, but we just need to be We just have to be close and monitor it. Now, same thing goes with the CRB index, widely tracked. You can see here it had negative divergence as we cracked through this area of resistance. We flew up higher to around 210, which is an area of resistance on the longer term chart. We had the price percent oscillator at negative divergence, crossing over to be bearish as well. Overall bullish context, it would be healthy to see a pullback into right around the 100-period moving average to the 50-day moving average. So it seems to me, and this is a basket of commodities, you know, we're seeing some weakness right now, but it's healthy weakness. We need to see a pullback, and then we want to see a resume trend. So we'll continue to monitor that. As I see it right now, we probably see support, like I said, in this pink box, which is right around 195 down to around 187.50. Now, Bitcoin, this one's on everyone's mind because, well, cryptos themselves got completely, knocked out the other day with just this gigantic decline. But let me give you a little bit more thoughts on, what I potentially think can happen. So first off, on declines like this, which I've already stated, you can see monster rallies. Typically, because it forms these dead cat bounces. People buy those dips and they buy it like crazy, and then it creates even more momentum, and people run into that. And you see these large moves. I mean, we were down at 30,000. It was up to like around 42.5 today. It had a high of, where were we? Yeah, 42.520. So it's like, nothing to worry about. We're quickly recovering. And if you just go on like, not even Twitter, but TikTok or Twitter, and there's a lot of hope. And these rallies give them a lot of hope, and it makes them, okay, I can stop caring about it. And they might be right this time. Who knows, right? But just note that I've seen plenty of times where you see monster declines bounce like crazy just to head lower. So I am not convinced of a rally, even if it breaks, this 47.550 range. If it comes up all the way to there from where it's at right now, that would just, everyone would be probably, see, told you, it's going to the moon. That's still not out of the woods. You're seeing these moving averages start to flatten out. That's an important sign to a trend. 50, it's about to cross through the 100. The 20 is just crossed through the 100, and it crossed through the 50. So you're starting to see a lot of shift in momentum as we've had this large topping pattern here. Notice here, this was resistance, so I drew this out. Then it acted as support. And notice here, we cracked through it. It flushed very hard, and we came back, touched it darn near perfectly, and started getting rejected again. So perhaps it consolidates at a high level right here, and then we break out of that and try to push it higher. But as it stands right now, be very wary because, it's, well, one, my sweet new buy signal hasn't activated yet, which I haven't made the movie yet because I got busy today, but I will. Just be careful. All right, that's all I got to say. I'm going on. Gold, showing some signs of strength, but it is getting overbought. Okay, RSI suggests that it's overbought here, but that's okay. Things could get overbought and could stay overbought for a long time. Just note that, I posted a mining setup in my Patreon group, and I had to note, like, if gold's getting overextended, chances are if it starts pulling back, you'll see the miners weaken too, right? We've seen that countless times, but we are seeing a lot of strength. Look it's hard to say. It has to hold up here. The longer it holds up here in these levels, great. If it comes back test this trend around 1840, I'm all right with that. If we start cracking down back through into this channel, I'm not so fine with that because that can present follow through on the weakness. So yeah, it's above some key levels right now. We're seeing some strength. That's good, but it's getting a little ahead of itself. So it might have to take a little bit of a breather as we're seeing these big commodities that I already pointed out previously, like take breathers like copper, for example, right, and CRB index. Silver, I just really want to pay attention to this red resistance up ahead, right at around 30. It seems like it wants to go up there. Look at the moving averages. As far as context goes, they are just trending sideways, right? So it's okay to see this thing break back down and move around still. We don't have clear direction, although the longer the price action stays above it, the more direction it will create. It'll have those moving averages spread open and start pointing more towards the upside. They are upsloping for the most part, right? The 20 period is. All of them are technically upsloping, but on a longer term, they're kind of flat. Now, this channel I drew out because it looks important, right? So we have just multiple tags. So keep an eye on this. If it breaks down, we might see a little bit stronger of a flush, but it doesn't mean, all things lost. Just be mindful of that as it kind of doodles around within that channel. Once we start breaking above 30, that seems to me like I think we'll get a lot more momentum buyers into it if we can even get that up there. Price percent oscillator looks like it's flattening out too as well. It's right at around 2, so it might do a bearish crossover if this continues to go sideways. We will monitor that. Dollar today, it just erased yesterday's gains. It's back below the year, so now it is bearish in a bearish trend. Bearish on the year, bearish on the trend. It's negative on the year. Talk about a lot of back and forth, right? But that move down on the dollar really helped out the S&P 500 today and other asset classes, right? It was boom, went up. But let's see it crack through these levels and potentially take out this low to feel a little bit more confident that the dollar can head lower, which I do think it can. But the only thing that kind of still interested about is the seasonality on the dollar typically rises, and we've just seen this continually decline. And it makes sense. I mean, it does make sense why the dollar is falling. I'm not going to go into that right now, but I would imagine the dollar can break down through 89 probably. That's probably right around 89, and then it could head to 85 probably very fast. We've already seen it move from 93 down here very quickly, and that might fuel even stronger of a melt up. But just note that it's just doodling around, and we are negative on the year, right, as it stands right now. Bonds and yields, we'll quickly go over this. This is the TNX. This is the 10-year yield. I pull this up because I can look at candlesticks on the daily. Bullish context, somewhat of a flagging pattern, down on the day, down 2.91%, so pretty significant down day, nothing crazy. I think we're still, we're at a flattening 50-day moving average, somewhat of a slightly upsloping 20-day moving average, and then the others are up too. Price percent oscillator looks like it wants to cross back over, and the RSI has a little bit of a downtick too, so maybe we just doodle around here a little bit longer. Perhaps, this consolidation will turn into a breakout where we head higher. Where's the 10-year yield at? So we closed at 1634, so 1.63 on the 10-year as it stands right now. And when I pull up the TLH, when we look at the bonds, this potentially has a bottoming pattern. And this is where we tie everything together into the conclusion section, really. This is interesting. Overall, very bearish context, right? Look at the moving averages all sloping down here. But these ones here, it's kind of could be potentially an accumulation phase. I'm not going to put too much weight on it right now, but you can see a high here to a lower high bounce. It hasn't really fully bounced yet, but a couple of days, we put in, a higher high, then another higher high right here, still below the 20 and below the 50-day too as well. But this is how bottoming patterns start. Now, if we start breaking above 145, that's probably in confluence of resistance with the 100-day moving average at that time. That could present, something bigger. And as we're starting to see utilities, XLP, defensive stuff find some strength, right, from a relative standpoint, and we see some absolute, from the absolute standpoint, starting to see some bullish patterns. Maybe we're going to start seeing more strength here very shortly in defensive names and also in bonds. And if that's the case, well, that sounds to me like a risk-off environment. And I can see why probably a lot of traders, a lot of professionals have probably reduced positions. And I've already been hearing a lot of other people are going fully into cash, which is interesting. It's very interesting as we're kind of navigating, and this is the conclusion section, by the way, why we're navigating this overall very bullish market, but it's like being very cautiously bullish. Like people just don't believe it to be bullish, but it is bullish. And things could change, at a moment's notice. So like I said, I don't see clear direction in a lot of things right here. So be very choosy and picky if you're trading individual stocks. You want great setups. You want sectors that are performing. So just yeah. She'll just do a lot of yeah. All right. See you later. That's all.